Observe the global markets, and you can see where capital is moving, a shift taking place largely out of sight for the average retail investor. Warren Buffett has spent his career avoiding technology stocks and waiting for deep market discounts. Recently, his holding company liquidated his positions in long-standing giants like Visa, Mastercard, and Amazon to raise a significant cash reserve. He used that capital to establish Google as a top 7 holding in the Berkshire Hathaway portfolio, buying in while the stock traded at its all-time high. At the Stewardship Finance Academy, we are dissecting this specific bet to see where the next decade of wealth is flowing. Buffett broke his own rules because he identified a structural advantage in Google's model that the broader market is currently underestimating. In 2023, the consensus was that ChatGPT's direct, ad-free answers would dismantle Google's search monopoly. Google's response appeared slow. Their early Gemini launches were often viewed as unfinished or less capable than the competition. Rather than trying to drive users toward a new, separate application, Google integrated AI directly into the existing search bar. Search traffic increased, and users began clicking on references inside the AI overviews more frequently than they did traditional links, driving Google's revenue higher. This chart compares the two user paths. A standalone AI app requires a multi-step process: logging in, crafting a prompt, and waiting. A native search query is instantaneous. Because Google holds decades of personal data, from search history to location, it can serve specific answers without requiring a long prompt. They turned their scale into a frictionless monetization machine. Standalone AI companies often rely on subscription fees to cover high overhead. Google operates a closed loop through its ownership of Android, YouTube, and Workspace. Every search query, email draft, and video edit feeds back into a profitable advertising and retail network. There is also a hidden infrastructure advantage. Google built its own custom AI chips, bypassing the need for external suppliers. While other Silicon Valley firms are competing for computational power from outside vendors, Google's AI infrastructure runs on its own proprietary hardware. To learn to identify these institutional shifts, we developed the SFA Free Stock Investment Masterclass. The link is in the description below. Buffett bought a digital toll bridge. Regardless of which chatbot wins the consumer race, the competitors will likely pay a toll to Google's underlying infrastructure. The competition is widening. OpenAI is now launching agentic AI systems like Codex to move beyond simple text generation. An agentic system can control software and complete complex multi-step workflows across your computer. Meanwhile, Anthropic is seeing a trend of high-level engineers leaving major tech firms to join their team, specifically to work on AI safety. This chart tracks Anthropic's rise. Their focus on data privacy for large corporations has driven their private valuation to $950 billion, positioning them near the $1 trillion mark. Algorithms are becoming a commodity. The winner of this war will be decided by who controls the most effective distribution channels. This diagram shows a standard daily routine. During the workday, you use a secure model like Claude for corporate tasks. On your commute, you use Google's Gemini for fast location-based searches. In the evening, you utilize OpenAI for complex education or personal projects. Our internal data shows a direct correlation between a worker's AI token consumption and their total sales performance. The barrier to entry is falling. Start delegating low-value tasks to these machines now to stay ahead of the curve. To position your capital correctly for this shift, join the free Stock Investment Masterclass in the description. The smart money has already made its move. This wealth transfer is underway, and it waits for no one.